read here. What are you seeing in this chart?
Look, if you looked at this 2 hours ago when the market opened, 3 hours ago, it was kind of nasty. I think you got to be a little bit encouraged by the rebound. There's quite a bit of divergence between what the S&P looks like and what the NASDAQ looks like in small caps, which we'll get into here in a second. But I do like how this is holding the 50-day moving average. Keep in mind, we did gap down a little bit. So when you look at the ETF, you're going to see a little bit different read on the candlestick. Which honestly, Tim, if you want to be a little bit more optimistic, look at SPY. It's got a nice green candle for you. ES, you don't see that as much, but it does show what happened since the cash open. We sold off right off the bat, but are rallying back. And now at the high of the day, intraday. So bulls are putting up a stand here, and you're seeing a lot more strength in small caps today. So look, I mean, we're down quite a few bars in a row. So we'll see what happens through the rest of the day, but so far so good, I say, for a bottoming attempt to this downswing.
Greg, I read the rookie blog that you put out there today, and obviously that's a very popular one within our community. A lot of beginners get a lot of value from that. You're starting to see some chop and some consolidation, specifically in some of the areas of the market that you're watching. Knowing you as well as I do, I'm guessing you're approaching it with dividends and cash flow and cover calls the way that you approach many market conditions. What are you seeing in these markets, and how are you treating them right now?
Yeah, so I wrote that rookie blog yesterday, and then it was strictly about the pain of consolidation for a lot of traders. You know, we've been spoiled recently because we had a pretty aggressive move, you know, to the upside in just the general markets, especially with some of those SPAC type stocks and just kind of some, you know, almost like a frenzy there for a little while. And now we're, excuse me, now we're getting that more of that sideways chop that makes it tough for bears and bulls alike, right? So, you know, the thing that I talked about in the rookie blog, and it's the thing that I do now, is I kind of look at a few different things. I want to know, okay, how much is the bias changing? Like, to what degree is it changing? You know, what is my new bias, and what do I need to do to be in tune with that, right? So my posture on the market. One of the examples I used was last March. We went from crazy bullish to crazy bearish within 0 to 60 is what it seemed like, right? Well, we're not seeing that same thing now. We're seeing this turnover, so to speak, a little bit of a pullback, like Tyler said, you know, 5-6 days in a row. We're at some support levels, some very key support levels. I'm watching that 50 very closely, which most traders are. And so instead of doing that knee-jerk reaction from bulls to bears, now you've got to do that. You've got to look at it a little bit differently and say, okay, well, maybe we're not bullish anymore. Maybe we're now, you know, closer to neutral. Maybe just, you know, push into that -1 area. What you got to do is look at your bias and then get your portfolio to match that. And that's really what the rookie blog was all about. And it's exactly how I approach the markets as well. When I see change, I try to quantify that change, and then I try to match it to my portfolio. Some of the easier ways to do that: cover calls, right? So if you've got open stock when it's running up bullish and you start to see a turnover, you can throw some cover calls on. That's going to bring your delta down to a manageable level, so that if the thing gets aggressive to the downside, it's not going to crush your portfolio. So, you know, you really got to look at the market objectively, see what the change is, see where you stand with that change, and then make the adjustments accordingly.
And Greg, your audio is a little bit lighter than Tyler's. If you can just pull that mic in a little bit better. I heard you just fine, but just for the next one, see if we can pull that in just a little bit. I'd appreciate it. And for me, the S&P 500, though, Greg, I mean, I'm seeing consolidation in some areas of the market. I know the chop is here. We've been putting in lower candle highs and lows for 4 days here, Tyler. So you have to respect that here in the marketplace. The S&P is pulling back into the 50-period moving average. It's a very different read than what I'm seeing in the NASDAQ and the Russell, though. So we're starting to see those consolidations work differently across different indexes and sectors. And Tyler, if you can, and then I want to get Matt's commentary and thoughts on the whole broad market. Can you quickly just flash through the indexes to give some context as to what we're seeing as separation between them?
Yeah. So if you look at the S&P, you would just say, oh, what's all the fuss about? It's a garden variety pullback to the 50 MA. Well, yeah, but underneath the surface, you take a look at small caps, for instance, and these, which thank goodness they had such a big rally before this. This would be a lot worse if we started from a lower level. But percentage-wise, we were off, I don't know, 10, 11, 12%. That's not insignificant. Like that's a pretty substantial pullback. Broke the 50-day moving average. Yesterday was gross. This morning looking gross again. I think this was down like 1.5%. So off the lows, I mean, we're seeing pretty big volatility here. So you look at the magnitude of the rebound. The S&P is basically unchanged on the day. This is now up 1.5%. That's the type of bullishness. That's the type of strength you like to see to give you some confirmation, some evidence that buyers are showing up and finally buying this. I think, we'll see how it goes. This could be the end of the downswing and the start of some kind of bounce. The challenge, though, is this is not a higher pivot low. You're below the 50-day moving average. This is not a garden variety pullback, easy by the dip opportunity. It's a little messier now. So you start to look at this and it's like, well, this is exhibiting, to Old Money Holmes's point, more range-bound consolidation type of action. I'd be a little nervous if I was short this thing after being down this many bars in a row. If you're bullish and you've been beaten up, today gives you a bit of a reprieve. Got to get back above the 50-day, but I personally like what I'm seeing here much more than if we were talking 2 hours ago. This has been a pretty good improvement.
And obviously small caps have been the one who's taken it on the chin, so heavily dependent on energy and oil companies, and oil has had quite a bit of volatility here. We'll get into oil here in just a minute, but the NASDAQ as well, though. I mean, Tyler, this is before the recent sell-off, because it had its 10-11% sell-off there early in February, but it's not necessarily developed into anything but consolidation since then. We're still stuck in this range, so we are seeing some of that price action kind of playing itself out in that regard. What are you seeing in tech here?
It's a mess. It's a mess. I mean, I was hoping that the best case scenario would have been kind of an inverted head and shoulders pattern here, looking for it to break the highs. Could have happened. It didn't. Now you've essentially broken this prior minor pivot. It's a mess. It's just choppy and messy, which is why swing trading is so hard right now in the NASDAQ, as well as really just across the board. I don't know. I don't tend to read too much into any individual candlestick when you're in the middle of chop. It's almost like, look, set an alert. If this can break back above the 50-day moving average, it's game on for bulls. Until then, it's just messy. I mean, on the downside, you have this lower level here, which I think is the downside target if bears press their advantage. But this chart looks completely different than the S&P and IWM, and it's just messy, which is why you can't find much in tech to do right now until this picks a direction. But yeah, in the short run, it's unfortunate that it broke that little pivot, but I don't know what to make about today. It's just a one candle in the middle of a range. I wouldn't read too much into it.
Matty, how are you reading these broad market conditions just in general, across any of these indexes, just price action?
Two things. Number one, from a bigger picture perspective, it is difficult right now. There's no doubt about that. But one of the difficult things about the market right now is in those typical bull markets where, all indexes are trading with one another, time frames are aligned, the market becomes easy because it discounts negative news. It doesn't care about that negative news. It says, oh, some ship blocked the Suez Canal. So what? We're going to be good 2 days from now, right? In a volatile market, it uses those moments in time for emotional decisions, and so you see volatility increase, and you get random price movements, and it simply becomes a more difficult environment in general, both from the investor standpoint all the way down to the day trader out there. And so we are stuck in the muck a little bit right now, and I do feel, even with today's price action, even with the chop this week, I don't think we're there yet, but I do think, like I said yesterday and the day before, I think we are closer to getting those timeframes aligned. We just got to, be a little patient in letting these markets really kind of establish themselves. But that's more from a bigger picture perspective. Now let's look at what I'm looking at today and what Tyler and I were talking about right before we went into the show. And that's what I think is the important technical data today. When you're looking at the S&P 500, which again is the barometer of the marketplace where we set our entire bias to, which is where we establish all of our rankings at tackle trading, from the broad market to the individual components of the broad market, that's the S&P 500. And when you're looking at the S&P 500 right now, yeah, it doesn't have the nasty chop that the Nasdaq has, and it doesn't have the swift potential reversal characteristics that the Russell 2000 has. You're really looking at a fairly standard type price movement here. I don't get too concerned about the price movement specifically in the S&P 500. We really haven't violated in this downward movement in price. We really haven't violated any major support levels, guys. You got a little bit of consolidation in the 20 and the 50, and a lot of that is based on the slowing momentum of the trend that we've been seeing over the course of the last month and a half. And so you do have some consolidation in that overall marketplace, but you still have yet to violate a major support level in this downward movement in price you've seen this week. And when you're looking at that 50-day moving average, yeah, we've had some volatile tests of that 50-day moving average, but it has been a fairly decent buying the dip type mechanic over the last couple tests of the 50-day. We're getting a hammer candle on the 50-day right now. Now, if you look at the intraday, about 30 minutes ago, Tyler and I were breaking down the intraday chart before we were getting into the halftime show here today. And I think, and I don't want to put words in your mouth, Tyler, but I think both of us were looking at that 38.80 level, and kind of like you said earlier today in the show, if you were to ask me that question 2 hours ago, I might have had a different response. But the market responded very, very positively coming after the cash open, took the punch, and then it was sitting right underneath that test of that 38.80 level, which over the last couple of days in the market has been a very, very significant intraday support level. It was testing that level, got back above that level, and I do think if you can maintain that 38.80 level coming into the close here today, I think you're going to have a different read on the market coming into the end of today than you did when we all woke up this morning being like, come on, can we figure out what's going on with this ship? Really, you can buy a Tesla with Bitcoin converted through NFTs, but we can't get a ship out of the Suez Canal? Really? Seriously? This is what's kicking the markets behind. So yeah, the market can be fickle, and it can, like we've said many, many times. You want to talk about the biggest flip-floppers in the world? It's traders. They can go from 2 hours ago saying the end of the world is happening to, hey, let's all buy the dip and go get rich. So we're kind of in that mentality right now, and it's a little nerve-wracking, but we do have some fairly decent technicals to kind of give us a little bit of a barometer and a foundation where this market can go for the rest of the week.